Good morning, everybody. It's Max Norbury here from ForexSignals, and this is the weekly report, weekly overview for the week commencing the 27th of June of 2022. Where is the year going? Now, everybody, first of all, I'd like to show you how to actually sign up for this report, get it for free every single week. It's an amazing way to get a good understanding of what we're looking at for the week ahead. This doesn't just cover Forex pairs either. There's Forex, stocks, commodities, anything else that one of our four analysts, including myself, wish to share with you, of which there are, obviously, as you may or may not know, a wealth of opportunities out there in the financial markets. So what you do when you hit our page, forexsignals.com, is you just literally scroll right the way down to the bottom. And down here, guys, you have all of the sort of bells and whistles, if you like, all of the toys that we have available for you guys to use in your trading. If you go over to the left here and you look at the trading room list, down at the bottom of here, we have the Forex Forecast. When you click that Forex Forecast link, that will essentially bring you to the page that we are currently on, which highlights everything in the Forex report. And you can indeed sign up for this, pop your email in there, click subscribe, or subscribe with Google or Facebook as well if you so wish, and it will send this to your email inbox every single week. So guys, this week, what are we looking at? First of all, it's up with me, and I'm looking at cable this week. And cable, or pound against the dollar, as you may or may not know, is essentially looking to range between the sort of 122 and 126 levels of supply and demand. We've hit a big level of accumulation at the moment down here with cable. We've been in a big steep downtrend. Dollar has been rising increasingly with Fed rate hikes trying to counteract the inflation over there. Quantitative tightening, as it's called, has been taking the market by storm, especially the US economy. And so the US dollar, which generally will follow the direction of the interest rates, which have been rising increasingly over time, has been getting stronger and stronger and stronger. But now that we've reached this big area down here, of 122, I have been calling this to be range bound, and we actually called this on the first wave. So as soon as we hit 122, which was the long-term target for this bearish trend, we were looking at 126 being the retracement area, which we did, as you can see, perfectly come back to. Then we were calling 122, and now I'm calling 126 yet again. I'm just literally trading that range. It's a really nice margin to be able to trade between the 122 and the 126 areas. Offers a big return, and it's quite a high probability as well. This week, however, I don't want you to forget, okay, and I've listed this off here very explicitly, okay, very clear. Please don't forget that it is NFP week, okay, it's non-farm payroll for the United States, which is further anticipating increased trading volume and volatility as a result. Not only this, but furthermore, we're also coming to the end of the financial quarter and month of June, so repositioning of liquidity in various funds will be taking place, leading to potentially choppy markets. Okay, and what this essentially means for those of you who may not fully understand that, when we come to the end of a financial quarter or the end of a month, you can see repositioning of funds, which leads to choppy markets. You can see profit taking. You may have heard the term profit taking. So this is that, but in a little bit more of an in-depth view of how the institutional liquidity will be repositioned at the end of a financial quarter. And this happens 4 times a year, 4 quarters in the year, right? And so when it comes to this kind of end of cycle of these funds, of this money in the markets, you can see a bit of additional market volatility as a direct result, where the millions and millions of dollars are being taken away from this, being added there, being put there, and being taken away from here. You can see that kind of give the market a bit of a choppy element, so to speak. Because this week does represent the end of the quarter and the end of the month together, you can anticipate they're probably going to be slightly increased trading volatility. So on top of that, you've obviously got non-farm payroll as well, which means it's going to be a little bit of a minefield here. So maybe you take a long-term position in cable, for example, if you did, and you were aiming for one of the areas, up here, 125, 126, 124, if you don't want to be in the market that long, you can possibly expect to see quite some choppy price action where that the market's going up and down quite quickly there. So that's what I'm looking at first of all. So second, we've got Scott Greer, who's one of our analysts here at the ForexSignals team. And Scott this week is looking at the S&P 500. And essentially he's looking to short the S&P once it comes back up into this area here of interest. Now that 4K area is a sort of, a technical level that he's been looking at, and he's essentially looking at this area being an area where market comes back to before starting to sell off again. He gives his, some of his thoughts here of, why we've been having the nice corrective in the stock markets. And what we could be looking at in the future. Basically, as he says in the bottom line here, guys. However, as mentioned above, the broader view remains a fade on rallies, which essentially is saying that after the corrective, he's expecting that market to continue trading off and trading lower. And then finally, guys, with the market report, we have Shane's weekly preview. In the weekly preview, Shane goes through every single day. He talks about the key markets and he talks about the economics that are going to be resulting in most movement in, for example, the US indices. On Tuesday, we're looking at the US CB consumer confidence. We're looking at that data, which is going to affect the US indices. Euro pairs as well, because of the ECB President Christine Lagarde speaking. So he will cover the day's events and what markets are going to move as a direct result. Comes out with a ton of information. Shane, really great analyst there, always digging in deep in doing those weekly previews. So it's a lot of information in there. Definitely pay attention to that, because it can give you, if not trading opportunities, from an analytical point of view, it really can protect you from taking some bad, or making, should I say, some bad decisions in the markets. So if you keep this information to hand, definitely can steer you away from some poor trading opportunities, which ultimately generates longevity in your trading accounts as you're learning and you're growing. So that's really the market report to cover that aspect. What I'm going to do is I just want to take you guys through a quick look at the currency indices. This is essentially sort of, my kind of view of the momentum meter, if you like. The guys get, everybody gets access to this stuff. If you use TradingView, of course, everybody can get access to this by joining our trading room, and I'll distribute the currency indices out to anyone who wants them. But essentially, what we're looking at here is we're looking at a chart representation of the individual currency. So the Japanese yen traded against its crosses, the Australian dollar traded against the G8, the euro against the G8, the NZD against the G8, and so on and so forth. So if the chart is down like the Japanese yen at the moment, we can anticipate that the yen is looking very weak, which, if you have been trading the FX markets for a while, you will know is the case. So with the Japanese yen at the moment, guys, we are definitely resting on top of support here. We can see this area on the daily time frame. It's a nice level of supply and demand, and the market is kind of starting to peak off a little bit here. It's just starting to tail off a bit. So I would say that the Japanese yen is definitely coming into support, and we could see a little bit of a relief rally from this area up with the Japanese yen. Looking at the Swiss index, we've come up to basically form a bit of a double top here. It's not quite reached up there, so it is a touch lower, but it's still looking like a nice rejection point for the Swiss index. Maybe expecting that Swissy to come back down to test out possibly maybe at around the 120 area down here. For those of you who are trading the Swiss, there's probably going to be a day or so of weakness, maybe a day or two of weakness in the Swiss before we get that bounce back and we start to see the liquidity start to push the Swiss up. We've got the New Zealand dollar here as well. Nice big strong rejection point, from up here at the highs of 36.30. If we look at this from a trend perspective and we look at the sort of daily corrective channel that we've seen, we've got 1-2 establishment down at the lows, we've got 1-2 establishment up at the highs. This is actually a really beautiful daily channel that we're seeing at the moment as part of a corrective. For me, this indicates that liquidity is probably more on the sell side than the buy side, equaling markets falling back down to approximately 35.80. So I'm probably looking at a couple of days of weakness in the NZD as well. It could do it in a single 24-hour market cycle, but with everything that I've mentioned about the end of quarter cycle, the end of June cycle as well, that profit being removed from the markets, repositioning of funds and repositioning of assets ultimately, I am looking at that one probably taking a little bit longer to do what it needs to do, and that goes across the board as well. The Australian dollar at the moment, guys, unfortunately isn't really looking happy in its current state of affairs, just kind of teetering along sideways. If I had to put a guess on it, I would probably say short. We've got the path of least resistance down this area until right at the low of 946. There's nothing really major in the way until that point, and we've already come back to retest the LZ here at 967. So I would be probably quite short the Aussie dollar. We've got the euro and the USD. I think the euro is going to be quite strong this week. We do have President Lagarde speaking several times. So it does significantly depend on what she's going to be saying. We do have Fed Chair Powell as well, which is going to be on the wires this week, aside from the non-farm payroll event, of course. The US dollar and the euro are going to be the two most volatile currencies from an economics perspective this week. We have a ton of economic data points being released. And so therefore the US dollar is going to be at the forefront of that. And due to the fact that the US dollar and the euro together, the euro USD being the most highly traded FX pair in the world, it goes to say if it affects the dollar, it affects the euro. And so therefore you always have to take that into account as well. So at the moment, the US dollar's economic data points, a lot coming out. It's going to be quite volatile. It's looking weak at the moment. I would say the dollar's probably looking to trade lower, maybe back down to around 103 to 102.25. And as a result, the euro back up to previous highs, looking at around 107.20 to 107.30. Then we've got the GBP. The pound at the moment, guys, interesting place where it is trading. We've got a lovely descending level here. Got a confirmed breakout of the big daily trend that we were in. I think this one probably trades lower, although it is worth mentioning that we are still well on top of our support level here. This is our support level. Price action's at the bottom of it, but it is still not broken out. We want to take shorts in the pound. We're looking for a nice breakout of this area to get lower down to 122.39. And to bridge that gap between the margins here of 123.30 and 122.30 on the dot. So the pound at the moment still a little bit supported, going to wait to see if it breaks lower or if it actually rejects that area, comes back up to the previous highs at around 124.70 to 124.90, which would make a good case for the pound dollar long that I'm looking for in the weekly report. And then finally, guys, to tie it up, we got Canadian dollar. And the Canadian dollar at the moment, very range bound, had a lovely leg down here, had a nice corrective back up there. At the moment, it's just tailing off. We're either waiting for it to come back up to this area up here, which is just going to be a little bit of a fraction of a high for you guys on the intraday timeframes, or we're going to be looking at the big crash back down to around 766. And ultimately, guys, the Canadian dollar, I believe, will be shorter than longer following oil prices. UK Brent US crude prices at the moment, we're still very much within the downward wave here. It's a long market, long term, but we are trading in an area of distribution, potential distribution at the moment. So we could be looking for price action to come back down to around 101. UK Brent and US crude would be, looking at probably down at around 95. 95 for US crude. So with that in line, I'd imagine the Canadian dollars could have a little bit more sell side on buy side at the moment. The reason being, for those of you who don't understand, is because of the correlation between the Canadian dollar and oil prices. Very significantly correlated. One usually follows the other, because obviously Canada being what it is with the oil markets. Okay, so I think that just about wraps it up. Apart from this, guys, I'm just going to say this is, as you have probably seen, one of the first ones that I've done for you guys out on YouTube. I appreciate I haven't got Andrew's beautiful face. But it is going to be more of myself and my other 4 fellow analysts from the team that are going to be providing this work for you each week. Feedback is always a great thing to hear, because obviously we can then start to chop and change things around. We can add things in, we can take things away if you don't see it as too relevant. So please leave a thumbs up or a thumbs down if you liked or disliked the video. Feedback is, it's a great thing to be able to give. And we can, I can start to do a little bit of a review somewhere else, or if you didn't like the currency review, I don't have to do that on the next one, so please just let me know. And remember to hit the bell icon so you are reminded of any videos that are added to the channel up and coming. So guys, I'm going to wrap things up there. I hope you have an absolutely fantastic trading week this week. Remember, market report is entirely free, so keep this at your disposal, and make sure you sign up for the next ones as well. And ultimately, I hope to see you inside our trading room soon enough. So take care, guys, trade safe, and I'll see you on the next one. Bye-bye.